What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is February 25th of 2021. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, we've got three critical topics we're going to be talking about. First off, diving into MicroStrategy's over $1 billion buy order for Bitcoin and talking about why it really didn't have much of an effect on price. We're also going to be talking about Ethereum scaling as gas fees are sky high. What solutions can we turn to in the interim to solve the issue? And last but not least, a sponsored interview with Jack, who is the product manager for the SDK and development tools for the Cosmos network, and how Cosmos might be coming up as a potential player in the blockchain space. So we've got lots of things to discuss. Let's go ahead and dive straight into it, everyone. So starting off over the last 24 hours, we can see that the broader market here is in the red. We've got very few plays in the green, as most plays have been following Bitcoin as it's gone through and still maintained towards its correction territory. The only outliers here, which is actually kind of serving as a precursor to what we'll discuss later, are players like Phantom or Polygon, which are either more scalable networks or layer 2 scaling solutions for blockchains. So we'll talk about that in just a little bit. But I want to go ahead, dive in here, and talk about Bitcoin's price here. So just to let you all know, for transparency's sake, I sent out an alert in the Dash Report group. I actually picked up some Bitcoin at 46K, so not exactly the bottom, but got close to picking it in that case, at least so far. That all being said, let's go ahead and talk a little bit about Bitcoin's price since the correction, since we talked back the other day, and also as well since the news of MicroStrategy coming out to acquire $1 billion of additional Bitcoin. This obviously is still great news in this space. It is big news for sure. But what's really interesting is that a lot of people have noticed that after the news broke, Bitcoin's price didn't soar up vertically when there was $1 billion worth of buy-side pressure from MicroStrategy. The news article basically talks about how Michael Saylor and the board of directors of the company had basically led on an operation to issue about $1 billion of convertible notes, or basically debt in this case, that are owed to investors in some way, shape, or form to be able to actually realize $1 billion cash raise that they therefore use to go out and buy more Bitcoin. So they've done this before in more of a smaller capacity, but this has been kind of a new famed way they've gone about doing it ever since back in the summer of 2020, they converted their entire balance sheet from cash, reserves, or other types of fixed income assets to Bitcoin. Now, getting that out of the way, we understand that they really did buy $1 billion worth of Bitcoin. This definitely sounds like huge news, and a lot of people are wondering, why is it that the price is still on the lower end of the correction here? Why is it, in fact, that if you take a look at the hourly chart when the news was released, we actually had a downward candle when the news broke across the headlines? Well, I want to go ahead and talk about something that's very important to understand, guys. And that is that as the market expands here, you are going to see larger and larger ticket sizes of entries for both individual investors and corporate investors who are using Bitcoin as a treasury asset in order to acquire less and less Bitcoin. And that's a very important dichotomy here of how things are changing over time. The amount of Bitcoin people are buying is generally not going down, but it's generally staying relatively stagnant or lowering a little bit. And the amount of people spending higher amounts of money in order to acquire this Bitcoin are going up, right? So the amount of dollars actually needed to buy one specific Bitcoin is going up over time. And that's a very important thing to realize here, in the fact that Bitcoin itself has gone up towards a much higher valuation from where it was back over the last year. Just really over the last year here, going back, back here, for example, even to May of last year, Bitcoin was sitting at around $150, $160 billion valuation, fully diluted in the sense of the actual circulating Bitcoin. And then over the last couple of months, we've really skyrocketed here since the fall of 2020, and we've gone up towards around $1 trillion valuation. Now we're sitting here around 928 billion, but this milestone of Bitcoin hitting $1 trillion market cap just over the last 3 days is a really important thing to keep in mind, because it sets the stage for how Bitcoin is evolving as an asset. And one important thing to note or kind of keep in mind that really kind of instills this milestone. Back a couple weeks ago, we heard the news of Tesla buying Bitcoin. They bought about a $1.5 billion buy order of Bitcoin, which was a certain single-digit percentage of their cash reserves. Now, this was a massive move. It definitely set precedent for the market that this trend is not just a couple of companies like MicroStrategy who are maybe more interested in crypto. They're small and medium-sized. So this is definitely setting a precedent. But a lot of people didn't notice that the amount of Bitcoin that Tesla purchased for over $1.5 billion was actually way less compared to the Bitcoin that MicroStrategy got when it did its first buy order, converting its entire balance sheet back in June of 2020. MicroStrategy only spent a couple $100 million. They were a smaller company compared to Tesla and had less cash reserves. And they ended up buying more Bitcoin back in the summer of 2020 than what the amount of Bitcoin being bought by Tesla here just over the last couple of weeks. And that's a great example of how people are spending more dollars per Bitcoin. So what really matters here is how much Bitcoin are being bought and how much Bitcoin are being sold. It's about a simple equation of inflows and outflows. And if the inflows are outpacing the outflows, price goes up over time. If the outflows or whales or large investors are selling more than the amount of buyers are coming in and buying new Bitcoin, prices decline. This is generally what determines market cycles. And the good news is that I think that we're getting more and more inflows, and there's been less and less availability for people to be able to sell, as most of these players who are buying are holding for the long term. They're holding as a corporate treasury asset. And that's been setting up this dynamic where Bitcoin has been able to go from a couple $100 billion worth of valuation up towards $1 trillion just over the last couple of days. So it's a very, very important thing to keep in mind that we not only need to see these ticket sizes going up, we need to see the amount of Bitcoin that they're actually acquiring. In this case, they only bought 19,452. Now, I know that to you and I would love to have 19,452 Bitcoin. I would try to change the world with that. But at the same time, again, this is not as much as you used to be able to get in the sense of total Bitcoin for the dollar size that they're spending. So hopefully that makes sense. It's an important lesson to keep in mind as you see these headlines roaring through that seem like they're market catalysts that are going to drive Bitcoin's price towards these astronomical valuations. We're going to need another dozen of these stories to really get us towards that 100K valuation or 100K price for Bitcoin. Now, let's go ahead here and talk a little bit about Ethereum, because this is the next candidate we need to focus on. The second largest cryptocurrency, second largest blockchain network. Ethereum recovering like Bitcoin in this case, up a good amount from its lows, but still on the lower end of its correction from around $2,000 as it tested that big even level. Now, Ethereum itself obviously probably pulled back a bit, as with Bitcoin in this case, as the market had rallied up quite vertically. And outside of that as well, we talked in the last video about how a lot of people were over leveraged, causing, again, in this case, a major liquidation event and prices to go down. But putting that aside, there's a fundamental worry here at hand for Ethereum that really could jeopardize its valuation in the long run, and that is its lack of scalability. Now, I know a lot of people point towards Ethereum 2.0, or they point towards other blockchains in this case being the solution for scaling out DeFi and other things like that. And I gotta say, I kind of take a cynical view on both points. It's gonna be very difficult to convert an entire ecosystem that's been built up over the last few years, and most of the developers of that ecosystem being focused in Solidity, onto another blockchain. Even if you give them all the tools and features to be able to do that, it's gonna take time because a lot of those projects are interconnected, so they need to strategize about what other chain they wanna move to. And second off as well, even if you're optimistic on Ethereum and you think that ETH 2.0 is great, I think it's gonna be great too. It's not coming anytime soon. To be completely frank with you guys, every inside source in the space, every even reputable public source out there, even Vitalik himself said that this is going to be a couple of years. Now, we launched the initial stages of ETH 2.0 already, a major network upgrade that's going to be a mixture of a combination of a few different upgrades that will lead the network to scale long-term through sharding, through things like the Ethereum Improvement Proposal 1559, all kinds of things that will reduce gas costs or try to help the network in some capacity. But they're coming over a longer period of time, either months in the sense of some of these smaller upgrades like EIP 1559, or the broader scaling benefits of ETH 2.0 that are going to be a year plus out from now. And that's optimistic, to be honest. Now, on the topic of optimism, this is where we have to focus on what really matters here in the short term. And that is layer 2 scaling solutions. One of those plays that could possibly serve a major leap forward and being able to reduce gas costs, to reduce the bandwidth and traffic on the Ethereum network that's leading to congestion and high gas costs just to process payments or swaps, is Optimism, or optimistic rollups. Now, Andreessen Horowitz, one of the largest VCs in the Valley, and for that matter, one of the largest VCs in the world of crypto, has recently led a round of $25 million in an Ethereum scaling solution known as Optimism. Now, a lot of you might have some very important questions, which we will dive into, of what a layer 2 solution really is and what is Optimism in this case. We won't be able to dive into all the details, but I want to go ahead and preface just how important this discussion of scalability really is within the Ethereum ecosystem. In this paragraph here in the article, it summarizes everything in the sense of the pace that projects like Optimism are having to move at in order to make things happen. As a result of being able to hire this kind of talent after the raise, we will be launching arbitrary contract deployment on mainnet in March instead of a public testnet. And that's very fancy speak for saying that we're skipping the testnet phase and we're going straight to mainnet so we can start to offload some of the development work, in this case in the DeFi ecosystem, into Optimism, into this optimistic rollup, or the OVM, the optimistic virtual machine, versus the EVM, the Ethereum virtual machine, how everything functions, right? So this is basically showcasing the urgency for this solution and solutions like Optimism. They're not the only one in the room of layer 2 solutions, or in the world of layer 2 solutions. So let's go ahead and talk a little bit about that. All right, let's go ahead and discuss first what a layer 2 solution is, and also talk a little bit about the distinctness between optimistic or optimistic rollups and zero knowledge rollups, or ZK rollups. So starting off here, what is a layer 2 solution? Layer 2 is basically what it says, similar to how a blockchain is a chain of blocks that are tied to one another, and within those blocks there's data of transactions and debits and credits into different accounts. In the case of layer 2, it is what it says. It's a secondary layer on top of the primary, or layer 1, in this case the Ethereum network, where network traffic that would usually have to happen on layer 1 can be brought onto a layer 2 solution. An example of this that you've probably heard about if you're a fan of Bitcoin is the Lightning Network. But the Lightning Network is really specific in this case towards Bitcoin, or cryptocurrencies that have a similar structure like Litecoin. But in the case of layer 2 solutions like Optimism or ZK rollups, they're built more for the architecture of the Ethereum network. And there's a bit of differences here with these layer 2 solutions, but before we even understand what those differences are, it's important to know how layer 2 solutions are actually implemented. They're not implemented at a protocol-wide layer. So on that layer 1, which is the Ethereum network, Vitalik, or the miners of the network who actually validate transactions and have authority for how those networks operate, they don't actually force projects to adopt layer 2. Vitalik can't wave a wand or wave his finger and tell everyone to move to layer 2 scaling, even though he's a fan of, for example, solutions like ZK rollups. At the end of the day, it is going to have to implement it at the project level. Projects like Uniswap, projects like Curve Finance or Compound, other layer 1 projects or protocols that are eating up the network right now are going to have to make the decision to move to layer 2 solutions themselves or through their governance process. But the important thing to realize, even with this, is that there's so much you have to consider when it comes to layer 2 solutions. Now, could projects go out there and get something out relatively quick that just probably works and does its job and starts to reduce some of the network traffic? Yeah, probably. And I would say that that's really the point where we're at right now. We need to just get something out there that works. But there is some things long term that people are going to have to consider, especially when they're debating the options of Optimism and zero knowledge rollups in this case, as well as other different types of solutions. How does interoperability work? Can we communicate in this case from one protocol to another without having to go on and off layer 2? Because if that's the case, if we have to go in and out of this layer 2 solution onto the main chain and then into another layer 2 solution, we're really not getting too many benefits. And outside of that as well, there's a lot of other things to consider in the sense of some of the benefits and setbacks of each and every solution. For example, with Optimism, one of the big setbacks is the delay that you have to wait for to sometimes withdraw your funds from that layer 2 solution. And also some of the possible security risks. A lot of people bring up the fact that when you're using something like Optimism, it's all on the optimistic assumption in this case that everyone's being honest, and you have to have a variety of checks and balances or fraud proofs in this case to be able to prevent people from being malicious on the network. And outside of that as well, zero knowledge proofs as well, zero knowledge rollups. I always mix those up because I'm so used to talking about zero knowledge in a privacy setting. Zero knowledge rollups, or ZK rollups for short, is a great solution in the sense of the throughput, but the problem is everything has to be calculated. All transactions have to be calculated like they would be traditionally. And outside of that as well, when you're considering this, there's a lot of developer restrictions. You have to actually build for a ZK rollup ecosystem versus the OVM, or optimistic virtual machine, where you can just port over your existing code into the OVM ecosystem versus the Ethereum virtual machine. So these are some things just on a surface level to consider. And I recommend reading through some of these articles. There's a really good one from Alex, in this case, who works for one of the major companies building in the ZK rollup ecosystem, that actually did a really good deep dive on the benefits and negatives of both of them. I really recommend you guys read through this because it'll give a good precursor to some of the surface level information that you need to understand, as well as some in-depth discussion about which of the two solutions might be more favorable in this case, depending on how you actually want to go about deploying your protocols to layer 2. But there's also some existing solutions that I like to showcase in this case who have been ahead of the curve, and one of them is Loopring. It's my second largest position here in the market so far in regards to the cryptocurrencies that I own in regards to DeFi. And Loopring itself is an actual implementation of ZK rollups that allows you in this case to be able to make swaps extremely cheap with little to no gas cost. So for example, and if I'm going through and I want to trade, for example, maybe 10 ETH in this case, the biggest thing I'm actually going to have to worry about with a protocol like Loopring is the price impact, because there's not a substantial amount of liquidity. There's only a couple $100 million versus Uniswap that has billions of dollars of liquidity. So now there are existing solutions here that actually work, but the problem is that they don't have the extent of liquidity that is required to actually make trading a seamless experience for especially larger traders. So again, it works great for maybe smaller investors. There are those solutions now, but we need to get more liquidity over to layer 2. And we also need that network traffic en masse to move to a layer 2 solution so we can actually see layer 1 gas fees decline. That's the general problem here. It's kind of a chicken and egg problem in this case, or I don't know if that would be. I would say, a catch-22. On both ends, we haven't really gotten it yet. We need enough of that liquidity to move to protocols like Loopring in order for it to actually seek the benefit of layer 2. Or we need, in this case, Uniswap and layer 1 protocols to adopt layer 2 solutions as well. So it's a very interesting set of problems here, but what the good news is that there is some developments in the space that are starting to garner traction here. And I'm very excited to see how things continue to grow over the next couple of months, because I gotta be real with you guys, as someone who's built within the Ethereum ecosystem like myself, I gotta be honest, it's really disheartening to see gas fees this high. The protocols haven't been a bit more kind of on the front end of being able to actually push for these initiatives. I know a lot of people are building out there, but it seems like layer 2 has not been prioritized by a lot of the major players that are taking up a lot of the Ethereum network that it should have been. And this has been a clear problem for the last 2 years in the crypto space, especially back in the summer of last year. I only hope that we can see some fixes coming very, very soon that will make Ethereum be able to remain as the #1 programmable blockchain, with the second largest cryptocurrency on the planet. And if they don't, this is going to give that time window for other chains to rise up, for projects and protocols to move over. I don't doubt that for a second. And I know we've got a lot of people out there who are big Cardano fans, people who are big fans of Polkadot and a variety of other players out there in the market. And as we're going to be talking about here in just a moment, players like the Cosmos network, which Binance Smart Chain has been building off of. So let's go ahead, let's dive into this interview with Jack here and learn a little bit more about the Cosmos ecosystem. Alrighty, everyone. So in today's sponsored interview, we're sitting down with Jack Zamplin, in this case, who is the product manager for the SDK and developer tools over at the Cosmos ecosystem, the Cosmos network. We're going to be sitting down today talking everything Cosmos in the sense of understanding what the vision of Cosmos is, and outside of that as well, how far the blockchain network has actually gone. Now, real quick, Jack, in this case, for those who may not know about Cosmos, I think an important thing to understand is that Cosmos is one of a variety of different blockchains out there in the third generation that's aiming to go beyond what Bitcoin did, kind of building a digital gold. Then Ethereum went on to offering ERC20 tokens and smart contracts through a programmable layer. But the idea of Cosmos in this case is really building in towards building a hub for different blockchains in parallel to be able to communicate, operate efficiently, but also independently as well from one another. So I want to give you some time. You can probably explain it better than I can. What is Cosmos's vision in this case, and why does it stand out compared to the competition?
Yeah, totally. So I think that your point about many chains operating independently is an excellent one, and sort of a great place to start. That is the world the way it is now. There's hundreds of blockchains that all operate independently. The idea behind Cosmos is, what if you could move seamlessly and through decentralized rails through all of those different blockchains? It would be a lot like the internet, a communication protocol where any two nodes on the network can connect, and transmit value between each other. And that's the vision that we're shipping with this IBC protocol that just came live. And that is kind of the original vision of Cosmos, is a permissionless money internet, the same way that the internet has that sort of like permissionless character to it, and trying to bake that in at the lowest level of the protocol. I think that you look at projects like that are building these very large kind of sharded blockchains. You can think of the Relay chain with ETH2 and DOT, or Near protocol. And those, in my mind, are kind of efforts to build bigger and bigger computers. And the way that the internet has ended up evolving is not bigger and bigger computers, but more and more networked computers. And that's the world that we built at IBC. And we've seen a lot of adoption for the core framework. And now we're going to see all of those chains start to pick up IBC. And this network is going to have connections to a bunch of legacy chains as well. So happy to kind of dig into any of those pieces.
Yeah, absolutely. I mean, to that point, Jack, like I think what's so nice about this is that Cosmos kind of builds a framework where you're not kind of siloed into the restrictions of how one network functions. You're not siloed into one specific governance structure. Right now, in the kind of current existing ecosystem of crypto, you have either one of two paths. Either you're a ERC20 token on the Ethereum blockchain with certain parameters and limitations, or you have to literally go out and build something up from scratch. And that's not really a favorable way to go about it, especially when you start to talk about the real beneficial things of blockchains, which are communication, being able to interoperate transactions, being able to liquidly move one asset from one chain to another. And Cosmos just kind of seems like it's providing this hub, as you mentioned, like the internet, through the framework that is much more decentralized and that would open for anyone to really go out and create their own blockchain and create their own cryptocurrency. And one thing that I really wanted to dive into as well, because I think there's so many other alternative chains out there, alternative ways of generating parallel blockchain ecosystems. But the really interesting thing about Cosmos in this case is that it not only has a good foundation and structure as a platform, but outside of that as well, the ecosystem is already budding. Like, so for example, there's a few projects we've talked about here on the channel that I'm a fan of, plays like Kava, along with that as well, eMoney, a lot of players building within that Cosmos
Terra.
ecosystem. Yeah, Terra as well. Yeah, there's a lot of great DeFi plays that are starting to shape up in the market. So Cosmos has actually got some really substantial projects already building in its ecosystem.
Yeah, I think Terra is the largest layer 2 DEX on top of Ethereum, like larger than Loopring, larger than all of these other sort of roll-up chain type things. Like, we built that technology years ago, and now it's ready to be used. Yeah. So, yeah, the ecosystem is an extremely important part of what we've built. If you're going to build a new internet with a bunch of nodes interacting, you need a lot of nodes. And I think that the reason why we built it the way we did, we shipped the hub, and with the hub, we shipped this developer framework so that users could build their own blockchain really easily. And we worked really hard to get that adopted by a large number of folks. If you see blockchain exchanges, which are kind of a huge chunk of these Cosmos chains, all of those exchanges went out in 2018 and 2019 and looked at all of the available options to build their own blockchain. And to an exchange, they all chose the Cosmos SDK. Binance, OKX, KuCoin, Crypto.com coin. I feel like I'm missing some as well, but all of those exchanges went out and chose the Cosmos SDK. And the reason why we went out and did all of this work to bring all these chains online is so that when IBC becomes available, it's not opening up in a vacuum. We're not just shipping a bunch of code and saying, we need to create a network with this code. We have a network, and then we're connecting it. And that's much more powerful than, sort of trying to astroturf that network at a later date with a big ecosystem fund or a bunch of other strategies that people have tried. But the way that we've done it, I'm really excited about.
Yeah, just to go back a little bit, because I would love to talk about some of the technicalities of Cosmos, because I think, again, you guys have a lot of unique selling points from the consensus mechanism. But just to go back on one of the acronyms you used, IBC, could you go in a little bit into that in that case overall, Jack?
Yeah, totally. So when I'm talking about connecting all these blockchains and this sort of idea of a permissionless internet of blockchains, IBC is the protocol that enables permissionless connection between any two blockchains. In the same way TCP/IP, which is what your computer uses to connect to other computers, IBC connects blockchains. And actually, we went and looked at the TCP/IP protocol along with some fathers of the internet who helped us build IBC and said, what did they do right? There's handshakes here. We're sending packets over channels. And we just replicated that with blockchains instead of with computers. And yeah, I mean, I could get into all the dirty cryptography stuff too, but I don't think your audience wants to hear that.
No, I think that that's good though. But I understand in that case that you guys took a lot of models from traditional internet protocols. And I think we have a lot to work with, as you mentioned, again, with the standard like internet protocols. You have things like voice over internet protocol, a lot of things we can learn. And a lot of people don't realize that when we're building blockchain-based networks, that we are kind of tapping into the same kind of framework or infrastructure in this case. But in this case, we're doing it for financial transactions, certain types of events and states on chain. One thing I wanted to talk about again on that kind of topic of finality and consensus on chain is Tendermint. I've heard a lot about this,
Yeah.
and for example, I think with any consensus algorithm, it's a bit difficult to explain all the technical intricacies of how actual nodes on a network actually reach consensus. But in maybe simple terms in this case, or maybe kind of like an entry level viewing to Tendermint, how does it actually work in this case? And why is it a more efficient consensus algorithm that, I mean, in the case of Cosmos, you can get transactions validated in fractions of a second for practically no cost.
Yeah, for sure. So I think one thing that people don't really appreciate about Tendermint consensus is that it is the first production proof of stake algorithm that has gotten out there in the world. So that's like sort of the new blockchain terminology, but also it is a direct descendant of a bunch of research from the aerospace and space industries from the 70s and 80s on Byzantine fault tolerant protocols. And Tendermint sort of advanced the state of the art in making those protocols easy to implement by engineers. And by easy, I mean, it took it from maybe who could implement it to 100 people in the world. Which is a huge leap. And Tendermint has kind of been acknowledged as this huge leap forward in consensus technology by Facebook, who mentions this in the first paragraph of their white paper for Libra, by pretty much all other subsequent proof of stake algorithms that rely on Byzantine fault tolerant technology. Like all of those algorithms owe a huge debt to Tendermint, and it's seeded the entire ecosystem. So Tendermint is also the most widely adopted Byzantine fault tolerant consensus algorithm out there. And we've got hundreds, if not potentially thousands of instances running out in the wild. I mean, just Cosmos alone, there's around 200 chains, and Tendermint has been around for, gosh, another 3 years longer than that. Tendermint's been in production for about 5 years now. So yeah.
That's incredible. And like for like a visual kind of like display of how it works, because I think, when it comes to proof of work, for example, someone in this case is going about, for example, doing some kind of proof, basically discovering a hash as they put together a block of transactions.
Yeah.
And proof of stake in this case, so as you mentioned in this case, that Tendermint in this case is an iteration, in this case, of proof of stake, and being able to actually have stakeholders in the network or delegated stakeholders being able to reach consensus on the network in an efficient manner.
Yeah, so the way that works is, if you think of each node in the network as a person, and each person has shares in a company, and they vote. And, somebody will propose a new rule at the company or propose to spend some money, and then the shareholders all vote on that change. And that's exactly how proof of stake works. There's this really formalized voting procedure within Tendermint itself that happens once every block. And that's kind of complicated when you dig into it. But from a conceptual understanding, it's just like a shareholder vote. And it happens once every 5 seconds.
Got it. And to that point as well, Jack, like, it's interesting because this consensus mechanism not only opens up for higher throughput of transactions, but as you mentioned, the ability to do governance and all types of really interesting things on top of that. But the really cool factor is that this isn't limited to, Cosmos in this case, those who are holding, staking Cosmos or voting on, kind of delegated changes for Cosmos. But all these kind of capabilities get passed on to any of the parallel chains within the Cosmos ecosystem. So as we mentioned earlier, Kava, for example, I think you were mentioning as well, there was, in this case, Terra. There's a lot of other different projects where they can take on those exact same benefits and really operate in their own independent framework.
I mean, we built for a future where a group of 5 to 10 people who want to build their own blockchain and start their own blockchain network and use that to govern essentially a DAO can easily do that. And you can pick up the software and do that today.
Awesome, man. No, that's really cool. I know for example, in the video we did previously and stuff on the channel, we took a look through some of the explorers, some of the on-chain activity, and also read about some of the future things. And that's what I want to ask you about in this case overall, Jack. I know we talked about
Yeah.
some DeFi plays coming in, but a lot of people here, like myself, are big on DeFi. And to be fair, for the last couple of years, and including myself, I built in the Ethereum ecosystem.
DeFi's on Ethereum.
What has been on Ethereum, but that's an interesting point here that right now we're seeing a lot of projects starting to move over. We're starting to see some diversity in the space and some people thinking that there might be a flip of a switch sometime soon to another provider. So I'm curious, what does Cosmos have in the bank for things that they're working towards in 2021 for DeFi? I know some of it will foster naturally from other projects, but is there anything Cosmos is doing to stay on top in that topic?
Yeah, so, I think that when you look at DeFi right now, the reason it's starting to leak out of Ethereum is because you are starting to see more of these decentralized bridges available with Ethereum, as well as these high gas costs there. And projects like Terra are benefiting. Secret Network also has a bridge. Very soon, the Cosmos Hub will have a bridge. I'm actually working on that right now. We're going to test it. We've just been doing test nets. We should be going to mainnet probably mid-month next month. And then that will go on the Cosmos Hub sometime this summer. So there's more and more of these permissionless connections, and it makes it easy to do this type of decentralized finance where you're not actually ever hitting any centralized entities across a large number of chains. And what IBC does is essentially create this pool of chains that are utterly interoperable with each other. And then from there, there's going to be connections to the rest of the ecosystem. And as you've mentioned, there's a number of projects that offer all of these same utilities within the Cosmos ecosystem. We're seeing Binance Smart Chain get a ton of press right now, as well as Binance Chain itself, which is a Cosmos SDK-based chain. Those will be available in this ecosystem, as well as Kava, Terra, Secret Network, Thorchain. There's a large number of these decentralized finance systems that are available for users. Move your funds, it's very easy to get to any of these. And I think that ease of use and that sort of user-focused experience where we're saying, you as the user, you have liquidity, we want you to be able to move around any of these DeFi applications seamlessly. That experience, we're a month or two away from really seeing the first strong IBC connections between zones and really these huge economic relationships. And that's just going to explode throughout this year. The wave of partnership announcements, the hype technologies just starting. Like most folks outside of the Cosmos ecosystem haven't really heard of us because we've been kind of building and only marketing to a very specific set of developers who are building blockchains. And that's not the sort of mass market marketing that you're seeing some of these other interoperability projects that haven't really shipped anything do to bolster their token price. So yeah.
Well, Jack, I gotta say, I appreciate you focusing more in this case on the technology rather than focusing on market dynamics, because those who focus in the short term and chase things of that sort, then they're probably not going to be around very long. Whereas you guys, and then in this case, as you mentioned, are taking in years of research from consensus mechanisms that have been researched for a long period of time, a design philosophy that actually allows new ideas to foster in, and not have to really worry about all these issues that are going on within, to be fair, the Ethereum ecosystem right now. So I'm very, very interested to see how you guys continue to grow. But for people who want to get, for example, maybe a broader understanding, maybe developers as well who might be interested, what would be the best place for them to go to learn more information? And I'll just go ahead and preface that we'll leave any links down below in the description that you think would be valuable, Jack.
Yeah, for sure. Cosmos.network is a great entry point. They're revamping that site to be a little bit more friendly for new folks coming in. We've got a huge presence on Twitter. So come join the conversation there. Follow me, follow Zucky Munyon, follow the Cosmos handle, follow a few other people. But Yeah, and then on the Cosmos.network website, there's links to all of our community places. We have a very active Discord. We have some very active Telegram channels. There's a lot of people who talk about this all day, every day.
Awesome, man. Well, I gotta say, Jack, it's been really nice to get to chat with you. I usually like to say, it's nice to get to talk to kind of the CEOs and founders and stuff, but I have to say, getting to talk with someone who's actually building the SDK or really the developer tools for people to build within the ecosystem that you're working on, I think that that's a really special opportunity. So for those of you guys who are interested, definitely go check out not only any other content you can find here with Jack and stuff on like some interviews to learn about Cosmos. There's some great videos that I actually got to watch, Jack, that I know you've done presenting the kind of design philosophy of Cosmos. But check out the links down below in the description as well, guys, if you're interested. But that being said, Jack, I mean, this has been really good, man. I think we hit on a lot of good areas. And again, I always recommend, if you guys are interested, check out the Cosmos Hub and learn a little bit more about it on doing some due diligence and research. But Jack, thank you for making the time, man. I really appreciate it.
One last point here. If you're a developer and you want to build your own blockchain, holler at me. I'm Jack Zamplin everywhere on the internet.
There you go, Jack. Good stuff, man. All right, guys. We'll talk to you all soon. Hope you all have a wonderful day, and I'll see you all in the next video. Take care, everyone.